What's going on, everyone? And today I just wanted to give you all a brief overview of my stock portfolio in Robinhood. So, I have been posting episodes of Stock Watch, and it's something new that I just started. So, a little bit of background information. I am a graduate student at Purdue University, and this is the first time that I'm actually getting paid something sustainable where I have some extra money. So, with this extra money that I have, I wanted to put it somewhere where it would actually grow. So, I did my research, I had my savings, and I used to have all my money in a savings account. So, I did have some savings from my time in undergrad where I worked. So, I did have some savings, but I didn't really want to invest that because it wasn't that much. And I felt like it wasn't really worth the time and effort to go through that when there was more uncertainty in terms of money. Like, I didn't know if I was going to need that money for something else. And now I feel like I have a consistent cash flow because of the stipend that I get from Purdue. So I decided that it was worth looking into something else apart from just a plain old savings account, which right now is yielding 1.7% returns. And that's like after the year is over. So I looked into a CD, and I was able to snag a CD from Discover for 2.4%, which is great, but I wasn't really still seeing that growth that I wanted. I felt like I could make it grow more. So I started on Robinhood, and I started off with I think $500, and I saw that it was actually growing. And before I even started Robinhood, keep in mind that I was watching stock market videos for months. I had been keeping my eye on things, and I watched the Graham Stephan show and Graham Stephan's main YouTube channel, and I was looking for financial advice, and I moved on from just Graham's show, and I looked at so many other channels and online, and I did my research, and the plan after that was to get a Vanguard account because I knew the majority of my money was going to be in ETFs. And Vanguard, personally, I think is one of the best ETFs just because of their low expense ratios and their credibility and just good reputation. So I was going to open an account with Vanguard, and I went through most of the application process. But then I realized that the minimum payment requirement for each ETF, so let's say I wanted to invest the S&P 500, I had to purchase $3,000 minimum of that share. And I thought that was just too much to invest all at one time. I wasn't sure how risky this was, how volatile the market was going to be. So I was scared, and I decided to download Robinhood, which was another app that I've seen a lot of people refer to. And lo and behold, I started off with $500, and now I'm here. And I started off with one share of Vanguard. So if I go down to the S&P 500 from Vanguard, you're able to buy just one share, which to me was perfect because I feel comfortable, quote unquote, risking $280, but not $3,000. So I ended up getting the S&P 500, and then I had bought a share of Microsoft as well, because that was another company that I knew, recognized, did the research and video on, or looked up other videos on it, and I felt comfortable investing in Microsoft. So there I was with my $500, and it was growing steadily, and I felt like this was a good place to park my money. And before I put more money in, I just kept my balance at around $1,500, investing in other ETFs and other stocks that I felt were respectable and had a lot of credibility tied with them. So I slowly started building a portfolio, and I realized that I was getting pretty good returns. And sure, there were those bad days where the market went down and the market went up, but it was just satisfying and great seeing how fast my money was growing, comparatively speaking, to it sitting in a savings account. So after doing my math, I was looking at my savings that I had in my savings account, and I realized that basically the return I would get in 1 year from my savings account, I would get in 1 month on Robinhood. And that's not even assuming I invested all of my savings. That's assuming I invest just like a third of it. So I thought, you know what, like I need to move some of that money into Robinhood, and I did. And I still kept some of that money in my savings account because something you need to understand, and this is why I say it's important to do your research, is liquidity. So stocks aren't as liquid as money in a savings account. And just to give you a point of reference, cash is the most liquid you can get. Cash is like accessible at any time and moment. If you ever need to pay something off, whether it's debt or you want to buy something like groceries, cash will always be there and you can use it immediately. Then you also have things like credit cards, where it's something similar, where you have money available to you in that moment that you could use in that moment, but there's some other stipulations to credit cards since it's borrowed money. Then from there, I would say it's like savings account, where your money is parked into a savings account. Sorry for the bad explanation, but yeah, it's like parked inside a savings account. And if you want money, you're going to have to transfer that money to your checkings account. That's going to take 2 to 3 days, depending on your bank. And then afterwards, you have that money after 2 to 3 days. And that's okay if you don't need that money as soon as possible. But if it's an emergency, you're not going to have it there ready available. Then after that, you have the stock market, where if I needed to withdraw, let's say $500 because of rent or something, and I miscalculated my budgeting, and now I need $500, and I have all my money in the stock market, the way I'd get that money is I would have to go, like, let's say I needed 500, I could go to VGT, and I would sell 2 shares, and I would get, well, I'd have to sell maybe another share, but I would get $461 after selling those shares. And then I could go into my account and I can transfer money from Robinhood into my checkings account. But that would take about 2 weeks. So I might not have that money ready and available on time. So, there's those risks. And then there's a bunch of other things like getting taxed on the profits you made, so you wouldn't exactly get everything that you're checking out. But this is more for a long-term investment. Oh, and then I would say that the least liquid is CDs, where your money is locked away for a certain time period, be it a year, 5 years, 6 months. That money you can't touch unless you want to pay the fee. So I ended up breaking my CD, and I got all my money back. I waited till I got my interest payment. I paid the fee, and I was doing the math. Like, even after paying the fee, I would make more in Robinhood in 1 month than having the CD for the whole year. So that was a mistake on my part, but I ended up breaking the CD, investing a chunk of those savings into the stock market, and then the rest into a savings account with Discover. So I have some money in my checkings for immediate use. I have some money in my savings that could be accessible for immediate use within 2 to 3 days. And then I have money in the stock market. So kind of diversifying where my money's at. And I feel like for right now, the way I've divvied up my money, I feel very, very comfortable. I have a safety net where if I really needed money, I can take it out from the savings account. And I feel like what I have in my savings account should cover rent if I needed it. I mean, it does cover rent. It covers enough for me to live off of that money for a couple days, weeks. I haven't really done that math because I don't see myself being homeless or anything. But yeah, you got to be smart about how much you want to invest in the stock market and kind of assessing where you are in your life and how much money you have to be able to invest. There really isn't a minimum requirement. Like, if you have $280 and you just buy 1 share of Vanguard, S&P 500, then, if you're not going to use or need that money, then go for it. But you really have to look at where you are in your life right now, how much money you have, what kind of expenses you have, and see if you'd be able to afford to not give away, but part with that money for a couple months, years, etc. So this money right here, I plan to leave for a very long time and just let it grow. And this is basically, I've had this since October 13th. So if I go to all, October 13th. And since then, I've profited $112, which is a 1.73 return in roughly 2 months. So this is already basically, I would get $112 from Discover in my savings account if I had invested $6,650. I would only get $112, and that's at the end of the year. This I got paid in 2 months. So the growth in this stock portfolio that I have is significantly larger than just in the savings account. I will say ignore this dip. After the Black Friday thing, like there was some glitch, and now I have this weird dip here. My stock values never went down that much. It says here that at some point on December 2nd, my stocks went down almost $6,000, which makes no sense. So yeah, just ignore this little thing here. But if you look at the past 3 months, the growth has been pretty consistent. Again, just ignore this weird dip. I'm sad that it disrupts the beauty of the chart, but if you look at the chart right here, like it's consistent growth. At some point, I had profited $220, but then something happened with the trade war with Trump and everything, and it dropped down to $112, which I'm still happy with, and I know the market will recover. And I've looked over the stocks I've invested in. I'm happy with my investments, and I feel like for the long run, this is something that will benefit me and has the potential to benefit you. So really, this is just kind of a video to inform you why I chose to invest in the stock market and telling you the points that led me to finally invest. And hopefully this will be a video that would help inform you on if you're on the edge of making this decision. I'm not trying to push you to the stock market. I just want to provide people with information when they're kind of like on the, I don't know if I want to put money in the market. It seems risky. It seems like it's just a place to gamble or whatever, which is like all the stereotypes and things that I used to presume too. But after watching some videos, reading some articles, and doing my research for a couple months, I finally decided to make the jump, and I gotta say that I don't regret it at all. So this is just my video. I'm sorry that it's so long. It's not like my short 2 to 5 minute stock watch videos, but I just wanted to be transparent with where I'm at in the stock market and my decision to join it. I can make a second video if requested to go more in depth to see like exactly what shares I have and why I decided to get those shares. But for now, just so like it doesn't get stretched out any longer, I want to end this video pretty soon. And I just want to say thank you everyone for watching. I know I have a very small audience, but it's cool. I actually enjoy making these videos and kind of talking to myself in my apartment. But thank you all for watching. I hope you have a wonderful life, and good luck on your investments and all your future financial endeavors. Thank you.